I think there were a number of standout statistics from the year. First off the bat, I think we can't ignore the residential house price increase in Dubai, which both demonstrated the health of the economy, but also the desirability of the emirate, both for businesses and individuals. The total value of real estate transacted in 2021 was $35 billion, which is the highest recorded since the global financial crisis. In turn, Dubai's prime residential market was the strongest performing in the world in 2021, which grew by 17%. Another very interesting stat relates to the performance of Saudi Arabia. The country had the second highest GDP growth amongst all G20 countries by the end of Q3, and will likely be a top performer regionally going into next year as well.
200 billion euro invested in European real estate so far this year. This is a standout statistic given the current circumstances. Despite the disruptions caused by the pandemic, investor confidence in European real estate is stronger than ever. Savills data show that investment into European property markets so far are 13% above last year's level and 8% above the 5-year average.
Well, there are obviously in an area the size of Asia Pacific, there are a great many standout statistics from this year. I think what really struck me was just the strength of growth that we've seen during 2021. GDP growth in Asia Pac has outpaced both the Americas and Europe quite comfortably. And again, we're being led by the major economies in the region, China, which recorded 8% growth, and India, which was closer to 9.5% growth. I think the other standout statistic, just following on from that, and perhaps a bit more real estate relevant, is that volumes have also seen quite a pickup in 2021. So if you look over the first 3 quarters of this year, volumes are up by around 30% compared with last year.
Real estate is the world's biggest store of wealth, with a value almost 4 times that of global GDP. The total value of all the world's real estate stands at $327 trillion, and that's a record high. We saw global real estate investment volumes bounce back in 2021. In the first 3 quarters, they're up by nearly 50% on the previous year. So while office investment volumes remain below pre-pandemic levels, volumes in the highly sought-after industrial sector are up over 44%. The big story for global real estate investment this year, however, was that residential, namely multifamily but also student and senior housing, became the largest sector for investment globally, overtaking offices for the first time. Investors are attracted to its secure, income-generating qualities and underlying structural demand.
Net zero. This is going to be the main priority of all real estate stakeholders in 2022 and in the coming years, because the built environment is responsible for about 40% of global carbon emissions. So investors will focus on measuring the carbon footprint of their buildings, identify which ones are underperforming, and try to improve their energy performance through retrofitting.
If I had to put a catchphrase for this year, perhaps resilience and resurgence. The resilience has come about thanks to the ability of the region's governments to deal with the pandemic and the crisis afoot. Government policies, changes on visas have helped, the pace of vaccinations have obviously helped, and also the relaxation to do business in the region has also helped, making this economy, both in the UAE and regionally, very resilient. Meanwhile, there's a resurgence in sectors like warehousing and residential as well as a focus surrounding the themes of ESG.
I think it'll be about emergence and divergence, both in the rate of vaccinations, also I think in the way governments handle this crisis going forwards.
Looking ahead to 2022, the buzzwords will continue to be all things ESG, or environmental, social and governance. This year's COP26 event in Glasgow highlighted the urgency to decarbonise the real estate sector. In 2022, COP27, held in Egypt, will further focus attention on the issue. The looming challenge of bringing office stock up to new environmental standards is just one way we'll see this play out. Driven by both investors and occupiers, there'll be opportunity to redevelop, reconfigure and repurpose stock that doesn't meet requirements.